appreciates. When they take out money, the value of the coin depreciates. So when do the liquidity providers remove money? When do the liquidity providers add money? I used to tell someone, I said Bitcoin only goes up when the liquidity providers buy them bulk. So quickly, let's dive into the characteristics of the crypto market so you can learn a few things as we round up in this particular episode. Difficult, some governments are not supporting the ideology. Some individuals are against it and thinking it's a scam because it is cut off from every government influence. Hi everyone, I want to welcome you all especially to episode 6 of our beautiful podcast on the basic trading foundations. Of course, this is a trading series that would help you galvanize your psychology, introduce you into better market perspective, and make you have better understanding and perception about the trading market. A lot of people come into trading with the wrong notion, wrong ideology, because of probably what they saw on social media, and they thought that's what trading is about, and that has formed their mindsets towards trading and has led them into several mishaps, and losing so much money in the markets. Some people have even termed trading a scam, and have said a lot of nasty things about trading, and even mentors, they call mentors deceivers. That those who call themselves mentors are actually taking money from you, teaching you what doesn't work. But you see, all of these things can be boiled down to the fact that the guy has a bad trading foundation, and that's what this podcast seeks to do, to help you build a solid foundation of which whatsoever you begin to put on this foundation can be able to lead you into a perfect career in your trading journey. Quickly today, we're going to be looking quickly on crypto trading. We looked at the Forex markets in the last episode from the beautiful book Forex and Crypto Trading by Jude Victor. Remember, I said you can always get this book from our website for as easy or as at a discount rate. The discount is 10 and 50% discount. Think about it. So a book of about $20 is sold for just $10. Okay, that's affordable. It's as affordable as $10. You can get this book and you can correct and have the right trading foundation as you grow. So we are reviewing this book in all of our podcast series, and last week we looked at Forex market and the characteristics of the Forex market. Today we're going to be looking at the crypto market and the characteristics of the crypto market. So I'm going to read a short article from the book while I go ahead and explain a few to you. Crypto market. The cryptocurrency market has emerged as a dynamic and highly volatile trading space with a market capitalization of over $1 trillion as of 2025. Cryptocurrencies are decentralized digital assets that use blockchain technology to operate outside the control of traditional banks and financial institutions. Bitcoin, the first and the most well-known cryptocurrency, paved the way for thousands of other altcoins such as Ethereum, Solana, and the Binance coin. First of all, let's look at this brief article on cryptocurrency and the crypto market, because it will help you to be able to understand a few things. A lot of people still do not understand what cryptocurrency is, but every now and then when we take you through such understanding or such information like I'm taking you through right now, it will help you to understand cryptocurrency even more. The market is getting bigger and bigger every day, and for those who have been anticipating the market to crash, I'm sorry to say that it's been a disappointing experience, because the market keeps getting bigger. Okay, $1 trillion in 2025. Where do you think it's going to? Where do you think it's going to? It lets you know that the market is getting bigger, is expanding. What role are you playing in the market? Are you relevant in the market? Are you part of what's going on in the market? These are the questions you should ask yourself. It is based on decentralized system of the blockchain and works outside the normal conventional bank. That means with the cryptocurrency, you are the bank of yourself. You control your money, you control what you have, the income you have. That's the beautiful opportunity. Cryptocurrency helps us to be able to transact seamlessly without being restricted. Okay, and then that means you can send from one person to another. Cryptocurrency helps us to be able to invest. It's, imagine buying a particular coin which would appreciate after a period of time. So you find yourself investing a certain amount, and in a period of time you're making some money on your money. And then thirdly, cryptocurrency offers us the opportunity to trade. Like a lot of us that are day traders, so we come into the market with certain amount of money every day, every week, every month, and we expect to make certain profit as day traders. The cryptocurrency coins give us these opportunities. So I can come into the market in a particular day and I'm trading Bitcoin this day. Maybe coming into the market with $1,000 or $5,000 and I want to make some profits. I can day trade Bitcoin and make money on it. Isn't cryptocurrency amazing? It's very amazing because it provides you many transactional processes and opportunities, investing, sending and receiving, and also trading. Is that not beautiful? So why do people still think that cryptocurrency is a scam? Why do people still think that when we're talking about cryptocurrency, we're talking about something that is of no value? Cryptocurrency has so much value. Okay, it has so much value. And the Bitcoin, in case that's the only one you know, is the first and has paved way for other altcoins like Solana, Ethereum, and the rest of the other ones, the Binance coin. So there are many crypto coins, are many. Bitcoin is not the only crypto coin, that's the only one you know. There are many other ones. So quickly, let's dive into the characteristics of the crypto market so you can learn a few things as we round up in this particular episode of the podcast. So we have the first one here, which is decentralizations. Decentralization, let's look at it. Unlike Forex, cryptocurrencies operate on decentralized blockchain networks, meaning no central authority like a government or a bank that governs the market. So we say Forex is decentralized, not decentralized in control. Okay, decentralized like in transactional. The decentralization of Forex market is transactional, but the decentralization of the crypto market is not just transactional. It is transactional, but from control. It is operated from the blockchain technology. So there are no authorities controlling your money. There are no banks controlling and regulating your money. And that on its own gives so much freedom. And this is where a lot of people find it difficult. Some governments are not supporting the ideology. Some individuals are against it and thinking it's a scam because it is cut off from every government influence. Think about it. And the next one here, one of the characteristics is the volatility. Crypto markets are known for their extreme volatility. Prices can experience rapid, large swings in short periods, presenting both high rewards and high risk. So in case you're thinking you're just going to come in and just keep on making money, that's a lie. It's a big lie, because the same way the volatility would positively present you profit, that's the same way the volatility or the volatile nature of the market can present you such huge loss. So in other words, you must know the system you're dealing with, and that's why you see we keep teaching you. We have our academy, KFC Trading Academy, because in this academy you will learn. You have to learn how to analyze the market. You have to learn how to approach the market. You cannot just trade like that. You cannot just invest. First of all, you have to look at the few fundamentals and the few technical analysis, so you're able to know that, okay, this coin is worth investing in, or this is how I should trade this coin. You must know when a particular coin is losing value. You must know when a particular coin is gaining value, because it is in the differences that you're able to make certain profits. And the next one here is 247 markets. You know what we mean when we say 247, 24 hours a day. The cryptocurrency market operates 24 hours a day, 7 days a week, unlike the Forex, which has specific trading hours. This constant availability attracts global traders, but also creates challenges in terms of risk management. You know, we talked about the volatility, we talked about risk also, because you see it's volatile to give you a lot of profits, but in the same way it's volatile to give you a lot of losses. It's if you are wrong, because in trading there are two things: you're either right or you're wrong. There are no in-betweens. Okay, there are no in-betweens. You are wrong, you're going to make some losses. You're right, you're going to make some profits. So as a good professional trader, one thing you must learn to do is you must learn to say, if I'm wrong on this entry, so in every entry you're taking, you're not 100% accurate, you're not 100% sure, you know, because you are speculating. So you come in with probability speculations. So you say, okay, if I am in this trade, or if I'm in this investment and trade doesn't go as planned, I'm willing to lose. So you cut your losses, then you take your profits. But if I'm right, I'm willing to take with a higher risk reward ratio. All of this is what has to do with the risk management system, but that will not be taught in a short nomenclature as we're talking now, or in a short episode as we're talking now. But if you subscribe to KFC Trading Academy, you will be tutored on risk management, because that on its own is like a course. Okay, so if the market is 24 hours open daily, 7 days a week available, unlike the Forex, constant availability of the market has attracted global traders. But at the same time, the challenge of risk management, because the liquidity providers are the ones that move the market. So global traders are coming in with money because of the opportunity in it. When they put in money, the value of the coin appreciates. When they take out money, the value of the coin depreciates. So when do the liquidity providers remove money? When do the liquidity providers add money? I used to tell someone, I said, Bitcoin only goes up when the liquidity providers buy them bulk. When they are selling off, it drops. If you can understand that system, then you can understand how to manage your risk. So you cannot be buying Bitcoin when it's expensive. You can only buy it when it's cheap. So when you sell off when it's high, you can make some profits. But when you buy Bitcoin when it's expensive and you're selling off when it's cheap, you're going to be making some losses. That's the same way with when you're even selling. That's the same way, whether you're in a buy, whether you're in a sell. If you acquire Bitcoin at a very cheap rate, and Bitcoin is losing value because the liquidity providers are selling off their Bitcoin, what it means is the value of the Bitcoin that you have is going to keep dropping. So you will, or you may be forced to sell. But you acquired and bought it at a very cheap price. So you see, at a very expensive price. So you see, if it keeps dropping, then you're going to lose money. So same way that the 24 hours, 7 days a week provides many opportunities and attracts global traders, same way there's high challenges based on risk management, and you must pay close attention to that. Market liquidity is the next. While liquidity in crypto market has grown, it's not as high as in Forex, especially for lesser known altcoins. This can lead to price slippage and larger spreads, particularly for smaller cap currencies. For those who don't know much about trading, they don't know what spread is, okay, they don't know what slippages are, but these things will teach you in the academy. Spread is just the differences in exchange. So because the liquidities are not as high as that of Forex, there can be alterations with slippages and spread. And sometimes you can just say a coin will just lose value massively because no much or strong liquidity as for Forex. Forex does not just drop like that. So you're looking at the DXY. DXY is like this. If it's going to drop, it drops and then it goes up again. Okay, but when it comes to the Forex market, when it comes to the crypto market, you can just see a massive drop and then it begins to pick again, and a massive drop and then a massive move, because the liquidity is not as sufficient as that of the Forex. So it comes, and when it comes, there's a like a sharp move, and when it goes, it's like there's a sharp move in dropping. So that explains the market liquidity. And finally, market influences. The crypto market is influenced by factors like technological advancements, regulatory news, market sentiment, social media trends, and the whale trading, which is large transactions by individuals or entities holding significant amounts of coin. These are actually what moves the market. In case you're wondering what moves the market, once you understand this, your fundamental will be right, and the rest of the technicals can now come in. I'll take it again. Technological advancements, regulatory news, market sentiment, social media trends, and then whale trading, which is what large transactions by individuals or entities holding significant amounts of coins. So when we talk about regulatory news, it doesn't mean that the crypto coin is being regulated. Regulatory news is fundamental in the sense that the Bitcoin could be used by a particular nation, okay, peradventure, and some regulatory usage can actually affect monies that are pumped into the Bitcoin or money that are removed from the Bitcoin. Technological advancements, when a coin is losing value because of it's not providing what the users would want. And you're talking about market sentiments. People are sentimental about a particular coin. It's like a particular, was it an altcoin or a meme coin that I read on an article that a young boy launched and crashed, and when he crashed it, he made a lot of money and he used it to acquire something for himself, a very young guy. And I think he said that the next time he tried to launch that coin, a lot of people refused to allow the coin gain value, or rather they had to drop the coin. That's like market sentiment. So you can find people, the market is moved by people, by large holders, okay, which leads us to the next one, whale trading. Large transactions by individuals or entities is what moves this market. So if these individuals or entities are sentimental and they don't put money, and for some reasons they don't want to use Ethereum and they want to use Bitcoin, that can affect the market, or let's say social media trends. So you find on social media that there's speculation that Bitcoin is going to $200,000 for a venture. You find a lot of people pulling out their money from other investments, coins, altcoins, meme coin, just to focus on Bitcoin because they want to invest and get money because of that social media trend. So these things can affect the markets and can influence the market. Outside that, nothing else could influence the crypto market, at least for now. If there are more, we can update you. Okay, I hope in this particular episode you've been able to learn so much, as I've taken you through the crypto market in brief, and also giving you the various characteristics of the crypto market. Make sure you take your trading career seriously. Keep on studying, keep on improving, keep on making researches, because you keep getting better by studies, by researching. Do not assume you know it all. Keep studying. Okay, but looking forward to having you in the next episode. Until then, keep winning in the trading industry. See you soon.